And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to it. I'm Stephen Grootes. Well, inflation coming in for the month of December at 3%. And for the first time in a little while, and there have been some indications that this might happen, there are one or two food categories where prices are actually going down. And look, they're not going to go down to where they were. It's very rare to see this kind of deflation, but you are seeing it a little bit. You're seeing it in the price of instant noodles, for example. You're absolutely not seeing it in the price of coffee, which the inflation there is still very high, and that's a global issue. But I was just thinking a little bit of how difficult food price inflation was, the impact it had on you during the pandemic, and just after the pandemic in particular, as the world sort of tried to recalibrate itself after the lockdowns. And just the sheer impact. And of course, at 3%, you would think the Monetary Policy Committee, well, almost has no choice but to lower and to cut interest rates, and maybe by more than 25 basis points. I say this because I suppose the logic would be, if the Reserve Bank is going to be quite hawkish to keep rates below, to keep inflation down, and the target range, the band, is between 3 and 6%, and it wants to do everything it can to make sure it stays within that. That goes both ways, both about when inflation goes above 6% and below, and when it falls below 3%, if I've explained that properly. In other words, if you're going to say you're going to keep inflation below 6%, you also have to keep it above 3%, and you'd suspect then that would justify a bigger cut. The problem, of course, is the US President Donald Trump. And isn't that what's going to keep central bank governors awake at night for quite some time? You just don't know what is going to happen. Interesting to see Mr. Price figures out today, and they're one of the first of the big companies to sort of report on their December. Their sales were up 10.8%, which you'd think is pretty good. The share price going down as a result. I think people were, and investors were expecting a little bit more than that. We'll get a few more numbers coming through, particularly on Friday, I think. And then as we head into the next couple of months, we'll start to see what kind of Christmas it was. Still a lot of positive sentiment around, I must just say, and some of it you heard the president in that EWN bulletin. He's at Davos. Some of that sentiment coming through there. Some of the stories coming out of Steinhoff, and you kind of think you've heard all of the Steinhoff stories, and then something else happens and you hear a little bit more, and we'll hear from Rob Rose, the sort of person who's really done the book and, dare I say, the miniseries about it over the years. But the PwC report finally now being given today after a very, very long court battle. Financial Mail and the Amabongani Center for Investigative Journalism, and well done to both of them, have been fighting the good fight in court. And I must say, I say this as a journalist, so take it from whence it comes. But if someone comes to you with an access to information request, a freedom of information request, and they say they want a report, if there is any chance that they're going to get it, just give it to them. Every time you oppose it in court, it makes the story bigger. If you just give it to them, it's going to be a 2-minute story. It'll be a bit embarrassing, but it'll be done. If you make it a big thing, one of two things could happen, which are both more damaging to you. The one is you could lose in the long run, having spent a fortune, and you'll have to pay their legal costs too, by the way. And the second is if you fight too hard and you're not entirely unified as a management structure, someone's going to leak it. And that's even worse. So just take it on the chin, get it over with, hand it over to the journalists and move on with your life. I'm really looking forward, by the way, to speaking to Donald Valoyi. He runs Zulzi, really founded Zulzi, the delivery app. There's quite an intriguing relationship, in fact, between them. I didn't know this. And the Checker 6060 app. I'll ask him about it. You may want to listen to that. He's your shapeshifter this evening from 7:30. You know the number, 011 883 0702 021 446 0567, and of course voice notes this evening on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, finally, after a long wait, several court cases, a couple of appeals, and dare I say some sense of anticipation, the Financial Mail and Amabongani finally able to see the full PwC report into what happened at Steinhoff, get an understanding of the deals that were done and how they were being done. And it would appear that at least one deal was concluded on a racecourse, which is normally a little louder than the traditional smoke-filled room. Rob Rose is now the editor at Currency, author of the book of Stein Heist, and really a chronicler of what actually happened at Steinhoff. Rob, good evening. Thank you for your time tonight. I mean, what have we learned from the PwC report? What was going on behind the scenes?
Evening, Stephen. Well, I mean, I do think that what you said earlier is completely on point. Is that, we do know the basics of what happened at Steinhoff. For example, the Techie Town deal, which is one of the deals that Steinhoff did, where it bought the footwear retailer Techie Town, is something we sort of knew about originally. So, had Steinhoff handed over this PwC report earlier, I don't think I think it would have done the company a service. As it is, we now have 5 years later, and you're getting some of these details now. So I think that what you said is completely on point. It does shed new light into various deals, and also just how many amazingly huge deals, slip past the directors, law firms, auditors, and the various guardians of governance who were none the wiser. I think that's perhaps the biggest revelation so far from this report.
I mean, we all know that Marcus Jooste was the prime sort of person. He's no longer with us. But there are other people whose job it is to make sure that there isn't a sort of culture of carelessness. And yet, from what you say, they failed.
Yeah, well, absolutely. I mean, I do think that the PwC report, it outlines the people who were instrumental in creating the fraud, as in creating false documents, as in creating fake companies, transferring money across borders that they shouldn't have. So that's one specific insight you get from this report. But then, like you say, it does reveal the secondary layer of insulation against this sort of thing, which is the people who should know better but might not have been actually intentionally part of the fraud. And I think that's the thing that other companies can learn a lot from. Why was a board of directors at Steinhoff, which had 3 PhDs in accounting, susceptible to an accounting scandal of this size? I mean, the fact that Steinhoff had the most heralded board in corporate history in South Africa and yet had this is, I think, a warning sign. And I think the auditors too. They had Deloitte, they had many auditors across the world, and this slipped past all those guys for many, many years. It was only in the final year when Deloitte got a package, sort of a whistleblower package almost, that alerted them to what was happening, that they actually scrutinized the transactions deeper and refused to take Marcus Jooste's word for many of the transactions in Europe. And that's ultimately what led to Deloitte failing to sign off to the 2017 financials and breaking open this case to some extent. Marcus
Jooste's word, isn't that really what this is about? It was about sort of what he was able to create and how people genuflected. They did whatever he wanted.
Absolutely. I mean, he was a complete bully, I think, as well. The emails and the discussions between Marcus Jooste and various people which are contained in the report, as well as other documentary evidence we've seen over the last couple of months, details how he was able to get stuff done by just bullying people, by just ordering people to transfer documents. And I think one of the things that I found amazing in that PwC report is there's an instance where he just tells somebody to transfer an extra 500,000 euros for himself into his accounts. The remuneration committee is supposed to approve that kind of thing, but they didn't. They just, this guy just transferred the money across to Marcus's account. The remuneration committee, which is meant to oversee this kind of thing, was none the wiser. But so how does a guy just do that? I mean, effectively, that's 10 million rand just going into the CEO's pocket. And that's the kind of thing that I think is just the kind of, scary detail that other companies will hopefully learn from in this kind of example.
Okay, so as I made the point that Marcus Jooste is no longer with us, there are people who are still alive who played a role who will be mentioned in the report. Does this change any of the consequences that there could be in store for them? I mean, there are cases still going through the works.
I don't think necessarily it does, because PwC, who compiled this report, have also worked with the National Prosecuting Authority to put the case together against those executives. At the moment, the CFO, Ben Frangi, accepted a plea deal last year and was sent to prison. The cases are still ongoing against the former company secretary, Stian Grobler. I do think that from what I've heard that they plan to add more people to the charge sheet. But it does certainly make it far more transparent in that once this is out and the stories are all out, people will be able to say, well, why was this person not charged? Why has the board of directors done this and there's been no accountability? So I think it certainly will put a lot of people into the public eye, and so too with the auditors. And I think that the implications for other companies like Tongaat Hewlett are big from this particular report. I mean, it illustrates that there's a strong access to information requirement when you have these kind of forensic reports happen. So it's not just Tongaat Hewlett, it's not just Sasol, it's also government. I mean, I think that the ruling that we got last year in this case means that nobody can really hide the information from the public anymore.
I mean, that's really the point in a way. It's taken you a long time to get this report. You were part of it when it started, of course, this application. But now the precedent's been set.
Yeah, absolutely. And I think that that's going to be the important thing, is that, you know, we can always, I think any journalist or concerned member of the public with an interest can say that this is what we need, and there's a justifiable right that we have to see it. And it's important for the public to be informed about these kind of things. And I think that that's a precedent that'll improve transparency, not just in the corporate sector, but I think in the public sector too.
Rob Rose, thank you. Editor at Currency, author of the book Steinheist. Really appreciate the time. As you know, someone who's spent a lot of time getting to the real depths of what happened, the real detail of what happened at Steinhoff.
702.
702.
Stephen is on X.
At Stephen Grootes.
Well, the World Economic Forum in Davos, people there spending a lot of time talking about climate change. While that's underway, news, of course, this week that one of the world's biggest polluters, the US, now pulling out of the Paris Agreement, the legally binding treaty on climate change. As you know, this is all expected to have a huge impact on how businesses operate in the near future. Lehlochenolo Mokwena is the founder and CIO at Creative Development. Lehlochenolo, good morning, good evening to you. I mean, this was expected. We all knew that the incoming US President Donald Trump would do this. The US is a big polluter. Is it going to have a big impact on the politics of climate change around the world?
Yeah, Stephen, thank you so very much. Greetings to you and the listeners. Thank you so much for having me. You can call me Nolo, by the way. I'm colloquially known by that, so please feel free. As regards to Donald Trump, again, there were really no surprises. I mean, he did this in 2017 during his first term. He kind of took a step back, and so this was kind of expected. It's quite in line with his politics and the pact with the people that he's working with. As far as the impact we see, I think it'll be two-pronged. One, there'll be a strong geopolitical impact in the sense of there'll be renewed optimism in terms of new players taking up the space. And so with the U.S. drawing back, I think this will kind of give buoyance to be it BRICS or really Japan extending some, or like Germany and other countries like that taking in and filling up that role. So I really foresee that where it would get interesting, as you said, is probably heading into G20 and other multilateral governance structures. Being South Africa's hosting this year, we know our stance as a climate leader, but next year it goes to the United States. And so it'll be quite interesting to see how that bodes, but I'm still bullish that there's still significant support globally. And even though I foresee a momentary sort of downtick in investments, I do think that the space will be taken up by the people seeking not just the economic return, but also to make sure that we're moving forward.
Nolo, I mean, there's a big difference between what people say and what they actually do in reality. And I wonder if we're at the point where economics has just taken over. So, yes, Trump is taking the US out of the Paris Agreement. The state of Texas produces around 1/3 of its electricity from solar power, and that's only going to go up. Produces a lot also from wind power. And you would not have predicted that 10 years ago. And by the way, 10 years ago, Trump was just about to start his first term. So my point is that in some ways it would seem the economics of this is really what matters. Yes, he said drill, baby, drill during his speech, his inauguration speech. Yes, we heard commentary on the Money Show last night that, in fact, countries like ours and others may feel less pressure to decarbonize because of that. But in the end, Texas shows where the economics is.
Absolutely. I do think this is not a new conversation. I mean, the sort of tension between decarbonization and economic viability is something that really underpins the entire argument and really has been at the forefront of it. So you are right. On the ground, the reality is that, really Texas has a big part of their energy mix is renewable. Ironically, even in the oil sector, a significant part of that is powered by wind turbines. And so the big question becomes, Stephen, what is the impact in terms of the federal decree at a local level? I still foresee states, and in particular mayors, still taking steps to ensure that they're climate resistant. A lot of things have been happening. And again, this idea of terminal growth rates outside of climate risk is really something that's fallen away long ago. So at an economics level, you're absolutely correct. I think people are still going to make sure that they're investing in a way that really protects their investments, the upside, the longevity, and so forth of the assets. But overall, geopolitically, I think this is more of America taking a stance and saying we're not necessarily going to go just go with the flow. We actually are going to have a say and have an opinion. But I think it's largely driven by the domestic reality as opposed to a more of a global reality. I still foresee American investors still investing heavily in the space and still seeing those wonderful returns.
We know also that the US can set the tone for a global discussion. Could there be leaders in Africa who now put climate change on the back burner because Trump has, and they have a little bit of political cover to do it?
Mm-hmm. Yeah, I foresee that happening. It's not new again. Like I said, I think it's probably more pronounced now because of the significance of the Trump win and the inauguration and kind of all the buzz around it. My estimation, or rather my forecast, is that we'll continue to move towards it, because here's the trick. It's not about renewables. It's about finding new growth opportunities and new pockets of investment that can really come in, particularly for the global south, and hit both levers really well, which is one, economic growth, so stimulating, making sure youth and young people are really being absorbed into the economy, building resistance into that, or resilience. But then the second piece is also solving our massive development challenges and issues. And really, if we look at climate as a share of ODA, it's really only increasing. And with the current discourse around rethinking the debt of nations, particularly in the global south, I do think that climate will still be at the forefront. Politically, yes, you are correct. There will be some people who will kind of stand behind and say, well, if the US is not doing it, I'm not doing it. But I largely foresee that as countries with really close bilateral links, particularly from a trade standpoint. But I still think that the economies like South Africa, like Kenya, like Nigeria, who are really driving this and at the forefront, will continue to do so, because it's good for us first. It's not just a thing that we're doing just so we can fit in.
Nola Mokoena, thank you so much, founder and CIO at Creative Development.
The Money Show.
The Markets.
Chris Stewart's portfolio manager at 91. Chris, good evening. Mr. Price, their quarter figures out to the end of December. Sales up by over 10%. The market seemed to want a bit more than that.
The face of it, a reasonably solid number coming out of Mr. Price. Double-digit turnover growth. And within that, some fairly encouraging comments with regard to discounting and the lack thereof, and the maintenance of gross margin. So obviously no financial numbers beyond turnover disclosed today, but certainly hinting at the fact that financial performance may back up those turnover numbers quite well if they can hold or improve their margins. But I think with all the hullabaloo we've been hearing with regard to Two-Pot and the impact that Two-Pot's going to have on apparel sales and retail consumption, it may be that the market's got a little bit ahead of itself in terms of what it's expecting with the upcoming retail sales updates that we're going to see. Mr. Price kicking off on the apparel front. We saw Clicks a couple of days back reporting also a reasonably respectable number, but again, slightly less than the market had been hoping for.
And Quilter, their fourth quarter trading update, they're talking, of course, about their assets under management, and I presume within that, a comment or two about the British economy.
Yeah, I mean, Quilter's net flow number is very strong, and I think the market's reaction to that today reflects it. So, assets under management coming in just shy of 120 billion sterling. That's a reasonable increase on a quarterly basis, although one must bear in mind that sterling weakness over the quarter and the fact that a reasonable proportion of their assets under management will be denominated in US dollars may have actually boosted the assets under management number as disclosed in sterling. But I think what was more important is they talked about net inflows just shy of £2 billion over the quarter, which is a pretty impressive number, about double what they'd done the previous quarter. And the December quarter is typically not a very strong quarter for flows. Nonetheless, they've managed to show better flows in the fourth quarter than the third quarter, and better in the third than the second. So continuing to show progressive increases in net flows into their business. And, as you point out, we had the UK budget announced in October. There were some changes to inheritance tax there, and there was a lot of concern that particularly amongst the high net worth customer base, that would result in people withdrawing money from investments and seeding it on to their children. Despite that, good net flow numbers even within their high net worth segment. So a pretty respectable performance from Quilter all round today.
And RioNet, they also had a big update.
Yeah, Roynette, Renette talked to their fund NAV as at the 31st of December. They provide a quarterly update of their net asset value. That was up 5% quarter on quarter. Now, we know that there's three main asset groups within there. There's the British American Tobacco shares, of which they've divested very recently. They've got a significant stake in a business in the UK called the Pensions Insurance Corporation, which effectively takes on defined benefit pension schemes that corporates are trying to get off their balance sheets, and does some asset liability matching, locks in margin, and has built a very good business around that. And then they've got some other private equity assets. Given that we know what happened to the BAT listed shares over the quarter and that those shares have subsequently been disposed of, it does look as though the bulk of the increase in net asset value was a result of an increase in the value they're ascribing to that Pensions Insurance Corporation business, which has been and continues to be at a reasonable sweet spot within the UK economy.
And then obviously very quickly, inflation figures today, 3%. We can presume a rate cut next week?
Yeah, I don't think one could presume anything in this current environment, but where the market had cooled somewhat towards the prospects of a rate cut in January, I think this has put it very much back on the cards, given where nominal rates are, given where inflation is, and therefore given where implied real rates are, even with some risk to global inflation as a result of the unpredictability of Trump's policies and tariffs particularly, and what impact that may have on global inflation. I still think we've got headroom to go ahead with a 25 basis point cut next week. So that's what I would be penciling in, but I've been wrong before. Hopefully I'm not going to be wrong again.
Chris Stewart, thank you. Portfolio manager at 91. Really appreciate it. Of course, more on the Money Show. We'll speak to the CEO at Naspers Prosus, Ervin Tu, in a few moments. Just gone 6:30.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Good to have you on the Money Show tonight. You know the number 011 883 0702 and 021 4460567. You might well have a view about what the Monetary Policy Committee of the ANC, of the Reserve Bank should do. Let me correct myself. Of the Reserve Bank should do next week. Well, another big day for the South African delegation at Davos. President Cyril Ramaphosa, some of his ministers, some of our business leaders taking part in the sessions at the World Economic Forum. One of the people there, the CEO at Naspers Prosus, Ervin Tu, agreeing to speak to you tonight. Ervin, good evening, and thanks so much again for speaking to us on the Money Show. There's so many different views about what's happening in the global economy at the moment. You operate in 80 countries now. You obviously have strong links to South Africa. Do you sense investor optimism about the markets you're working in at the moment?
Even first of all, it's great to be here, and I apologize if there's any sound problem. I'm trying to find a quiet corner here at Davos. It's not the easiest thing to do, so appreciate your audience's patience with me if there are any sound problems. The short answer to your question is absolutely, there's optimism. I think you can see that reflected in the market's behavior as we start the new year, and that's quite across the board through the markets it's across the board around the world. So I'll just leave it there, both public and private, and we too are also optimistic.
What would be the main variables about whether that optimism will remain? And I hate to say it, but tariffs and trade wars are the sort of discussion of the week at the moment, and some of that could well involve China.
Yeah, I think you've named it, right? That's the one wild card variable that everyone is considering and reflecting on. And of course, the problem is it's highly uncertain, and there's a probability of an outcome there, and most people know the probability of that outcome, which is there will be some form of constraint imposed, but we don't yet know, and we don't know the severity, we don't know the scope of that. So for now, we all have to take somewhat of an optimistic view and tread carefully. That's all we can do at the moment.
We see, there's several transitions underway at the moment. There's an energy transition. There's also a transition around, I suppose, intelligence. I know that's sort of the way the World Economic Forum sees it. Their focus this year is the intelligent age. People talk about AI. I'll come to that in a moment. But the way firms are run seems to be changing quite dramatically. And if you're a CEO, you'll know this far better than I do, Ervin. There's so many short-term decisions you have to make, things that need to be resolved now. Do CEOs need to keep their eye on the bigger story, the longer process that's underway, if they're going to stay competitive?
Absolutely. I think that longer-term story is actually quite clear where things are headed, this age of intelligence and the improvement in productivity that many of our companies are experiencing in our portfolio. But I know that our brethren throughout the world and other industries are also experiencing, and the direction of travel is clear. Things are becoming smarter. That is, of course, machines and software. And we have to harness that power to make ourselves more productive, so to our companies.
There's so much commentary about AI, and some of it surely must be hype, but a lot of it isn't. I'm presuming that's changing the way you operate as a group, and I presume across all of your markets.
Absolutely, Stephen. We have actually, before this most recent hype cycle of AI, and I characterize that as starting with the November 2022 release of that ChatGPT, I think it was 3.5 at the time. We actually hired a team of data engineers 6 years ago, and they have been over that period of time already deploying the technology throughout our portfolio in our operating businesses, providing advice to our portfolio companies, our minority positions, and we are very actively deploying the technology in a whole host of arenas, ranging from customer support to logistics optimization to personalization, you name it. And we know, as I said earlier, the direction of travel is clear, that we have to get even better. So our intent, our aspiration is in the world of commerce, which is where most of our businesses play, that we can have something to say. We use the term, it's a bit cute, but we use the term large commerce model to express what we hope to achieve, which is to actually contribute something meaningful in this regard in the world of commerce.
Your competitors are using it too, obviously, also probably in all of the markets you operate in. How difficult is it to keep ahead?
It's difficult, but we have something that we think others do not, which is we have practical experience of deploying the technology in the field, on the ground, in various markets, in real business settings. We aren't just a supplier of technology to a customer, where there's a little bit of distance between a supplier and customer relationship. We actually own businesses. We are investors in businesses, and we actually physically have teams on the ground deploy the technology. So we really have a perspective on what works and what doesn't work, and we think that gives us an edge in advancing our ambition here to contribute something in the world of AI. That doesn't say, let me just be very clear, that the others are not able and formidable competitors. You're absolutely right. They have edges in compute capacity. They have processing power. They have teams of people in hyperscaler capacity. So we acknowledge that, and at the same time, I think we also have something to contribute.
I think many people listening to you will just be thinking about not just consuming your services and sort of looking forward to greater productivity in the services they consume from you and other companies. They'll be thinking about whether they'll have a job. And they will be wondering about the space for people in the future after all of these transitions. And I realize that, throughout human history, whenever the sort of age of industrialization has changed, you actually end up creating new economies. And as a result, sometimes many more people are employed. But I do think that there's a tinge of concern about, just space for the human being in all of this.
I think you've already said it well, Stephen. The technology revolutions have always caused shifts in employment. They do displace incumbent industries, which are disrupted by technology, but at the same time, you said it well, they create at the same time new industries which employ people. And I think it's too early to call, and I understand the tinge of concern that you expressed. I understand why, it's very rational, but it's too early to call where and how this will develop, this new age of AI and intelligence. What we see so far is incredible new company formation, developing this technology, deploying it in practice. And so we're optimistic, but it's too early to tell.
Ervin Tu, thank you very much indeed. I'm sure you've got about 3 different meetings to be in at this point. Thank you very much for your time. Ervin Tu, CEO of Naspers Prosus, on the line to you from Davos in Switzerland at the World Economic Forum.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking. proud sponsor of the African Mining Indaba 2025.
Well, we'll take your calls about the US President Donald Trump and more besides. 011 8830702 and 0214460567. An interesting picture, I think, beginning to emerge for the Reserve Bank's Monetary Policy Committee when they meet next week. So Trump was talking about imposing tariffs again in the last 24 hours. This time he was threatening a 10% tariff on goods from the European Union. Today, Statistics South Africa confirming CPI for December just 3%. Just above the 2.9% recorded for November last year. Need I remind you of the inflation targeting band of the Reserve Bank? Koketso Mano is a senior economist at FNB. Koketso, good evening. Inflation at 3%. I mean, you'd think the Reserve Bank has no choice. It almost has to cut interest rates.
Good evening, Stephen, and all of your listeners. Yeah, I mean, it will be a great New Year's present from the Reserve Bank, which we anticipate. I mean, we see them cutting interest rates by 25 basis points next week. We think that this number is broadly in line with, the trend in inflation that has been anticipated. So we are starting to see a little bit of an increase, but as you said, at the bottom of the inflation target band, inflation remained quite benign at the end of last year, and we anticipate that it will remain at these low levels in the first half of this year. So at least the Reserve Bank has good enough reason to continue cutting interest rates.
Okay, so if the argument from the Reserve Bank in the past would be we have to keep inflation below 6%, does it not go the other way? And is there not also a duty on it to say we have to keep inflation above 3%? And as a result, there should be a bigger rate cut.
I mean, that's a very great question. I guess the issue for the Reserve Bank, and I guess I'll quote two here, is one, we know that they are traditionally very conservative. And you may have heard from the recent comments, you just spoke about, the probable tariffs that are going to be imposed by the Trump administration and what that might mean for inflation in various parts of the globe. And unfortunately, it may also weigh on, emerging market currencies during this risk-laden environment. So the NPC is probably going to flag that this may pose upside risk to the inflation trajectory, because if the imported goods that we need to bring into the country are more expensive, or that channel is through the rand, that is what is going to flag that upside risk. And we heard from the governor's latest comments at the World Economic Forum that he thinks that inflation will probably be tilted, the inflation risk rather is probably going to be tilted upwards. The second thing, Stephen, is the Reserve Bank says they are forward-looking. Right, so we know that inflation is weak or was weak in December. We know that it will remain weak in the first half of this year. But what happens in the second half of this year? When these positive base effects on goods inflation come out of the picture? What happens when, maybe with some demand picking up in this economy, you start to see services inflation picking up. So they're probably going to keep, that cautionary stance, but at least the restrictiveness of monetary policy should continue to ease.
Okay, so, I accept all of that, Koketso. I don't disagree with the governor most of the time on these things. If we can just have a closer look at some of the inflation figures today, and in particular food price inflation, it would seem that food price inflation is still coming down. That will depend on the rain we get going forward. But the food price inflation figure is so different from where we were during the pandemic.
Definitely. We're sitting at 2% handles. It's much better than where we were in the pandemic. Even if you look at the average 2023 number, which was 10.7%, in 2024, that average number was 4.6%. We've seen a very strong deceleration in food inflation. But I once more have to flag that this is still reflecting base effects. So the trick here with the numbers is how you look at it, right? If you look at the percent year-on-year numbers, you're always comparing to the higher base that was created either in the aftermath of the pandemic or the geopolitical tensions that have erupted ever since. And so you will see these very low numbers, reflected in the status say numbers. But when these base effects come out, which is what I speak to in the second half of this year, that's when you start to see inflation creeping up, even food inflation. But that said, Stephen, I still have to flag that on a month-on-month basis, which is the numbers that we keep an eye on, just to see the momentum of price increases. And you can still see that those remain very muted. I mean, we only had 0.2% food inflation on a month-on-month basis, and that was driven mostly by meat and fruit. So we've seen a lot of pressure on the fresh produce side, but overall, the remainder of the basket remains relatively muted.
So, I mean, yeah, okay, so there's a lot resting on this. And I mean, the big problem for central banks around the world is probably Trump and tariffs and unpredictability and geopolitical risk, to sort of put it all together in some kind of way. The problem is, and this is the impossibility of it, and it affects businesses that need to make decisions too, you can't put off decisions forever, and you can't live your life wondering what is the person in the White House going to do. At some point, you actually have to make a decision. And I can hear businesses and others clamoring for lower interest rates because they'll say, you can't keep using Trump as a bogeyman, a monster. You've got to actually go on the data. And the data says a lower interest rate.
Exactly. And Stephen, I mean, we're even hearing other market participants are saying, you should take Trump seriously, but not literally, right? When he first won the presidency, he was talking to blanket-wide tariffs being imposed, and that whole story was creating a lot of panic in the market. But ever since he's scaled down that approach, he's looking more at direct import tariffs on countries that have a trade surplus relative to the U.S. So it seems as though, there are politics and then there's actual policy implementation. So you're 100% correct when you say policymakers will at some point have to make a decision that is based on the real economic data. And based on that, we continue to see the Reserve Bank cutting interest rates at every meeting in the first half of 2025. So you should see 25 basis points next week. You should see 25 basis points in March, another 25 basis points in May. And that will be based solely on the data. But as I said, I mean, the Reserve Bank is more cautious than we would like most of the time.
No, sure. And I mean, I can understand why. Koketso Mano, thank you very much indeed, senior economist at FNB. Well, interesting just to hear the views and, of course, the prospects for inflation. The second half of the year is when things might start to get a little complicated again. In a moment, Graham Codrington and why it is that you're watching rugby and cricket in the same part of the year, the same time of the year. Used to be very distinct seasons, and why this is going to continue. Don't forget Wendy Nola as well. And then the link between Zulzi and Checkers 6060. The Zulzi CEO, Donald Valoyi, he is your shapeshifter this evening. He's got a fascinating story around Zulzi to tell you. You with The Money Show, good evening.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to the second hour of the program. I'm Stephen Grootes. We'll talk about cars and insurance in a moment. Wendy Nola has a story that really surprised me, actually, when I first heard it. I was quite intrigued as to how this can happen. She'll explain that. We'll talk about how sports seasons are changing in a moment. And then from 7:30, really looking forward to speaking to Donald Valoyi. He's your shapeshifter this evening, the CEO at Zulzi. I understand how Zulzi started. They did deliveries for students, essentially, and then they started to branch out. I'm interested in a couple of other things, some of the people they worked with. I'm interested also in what happened before. How did Donald Valoyi get himself into that position to start it in the first place? And I think there are going to be some very interesting conversations that come out of that, as I say, your shapeshifter this evening. You may have a view on the interest rate discussion, and I sort of keep making the point that, if you want to anchor inflation expectations at 4.5%, well then it has to be 4.5% when inflation is below that and when it's above that. I do understand and have a lot of sympathy for the argument that you really have to fight inflation as hard as you can, and particularly in our environment where we've had sort of historically high inflation compared to many of our peers. Not historically, if you go back to the 1980s and before that, inflation was usually much higher. Anyway, I'm just fascinated by how this is all going to play out. And of course, Trump is a useful sort of bogeyman, but you can't live your life entirely by what you think Trump might do. On the other hand, maybe you really have no choice. And actually, you need to be very pragmatic about it and incredibly careful about it. In the end, you probably are going to have to base it on the data.
The Money Show.
Business Unusual.
Well, I don't know about you, but I find it slightly frustrating that you end up having cricket and rugby on TV at the same time. Football has had a sort of global season for some time. Now it seems other sports are following that lead. Graham Codrington is the futurist and partner at Tomorrow Today. Graham, good evening. Why am I watching the SA20 and the Blue Bulls at the same time?
It is a little bit of confusion, isn't there? Well, certainly there is in my DNA. I kind of expected rugby to be the winter sport, cricket to be the summer sport, and now everything's everywhere. And I suppose, Stephen, good evening. This is part of, obviously, a globalization of sport, of course. But what I wanted to highlight tonight as part of the business and unusual focus is I think we're going to have to get used to even more unusual ideas related to sport. And I think it's got to do with climate change, actually, that seasons are shifting, not sports seasons, but actual seasons. We've got extreme weather, summers are hotter, winters are colder, weather is more extreme, and that is definitely going to be impacting our sport as well.
I can't help but wonder if it just makes it incredibly dangerous to be playing rugby, for example, in the temperatures that it's currently being played. And I know this has been an issue with some football matches in South Africa during this time as well. Rugby versus football, which makes you hotter, I don't know, but I wouldn't want to be in a scrum in Tshwane in 37 degrees.
Well, exactly. And we can look at football. Just recently, it was announced that Saudi Arabia has been given the 2034 Football World Cup. And just like they had to do with Qatar, they're going to have to move that now to the Saudi Arabian winter. And that, again, messes again with all of the seasons. When are you going to be watching your football? Every league in the world is going to have to adjust themselves for the 2034 season in order to be able to accommodate that shift in the World Cup. But you couldn't do anything else. There's no ways that you can play outdoor sport in anything approaching the kind of temperatures that Saudi Arabia has, even if they build fancy stadia with, fully air conditioned and everything that goes with that infrastructure shift. So you're exactly right. The first thing we have to think about is about the players, their health and their performance and the changing seasons and venues. But then if we start to think about that, as I like to do, and look more for the opportunities in some of this change, maybe golf is a good example. I know that for many people, golf is a sort of sacred sport almost. But think of the amount of grass, green space, water, the types of things you need to play golf just at an amateur perspective, but even more so when you've got spectators involved in the professional tournaments. And maybe, if the golfers will allow me two thoughts, the first one would be maybe we've got to think about getting rid of quite a lot, if not all of the grass. And don't think it's crazy to go to a sand-only course. We've done it with volleyball. Beach volleyball is now an Olympic sport. We've done it with football. Beach football is a really great sport to watch. We've done it even with cricket. Why not golf? Not just beach golf, but sand golf. That'd be interesting. Or maybe some people will find it better that we take the golf whole thing indoors. I don't know if you've been enjoying watching this new TGL, the Golf League, and these the simulated thing inside over the last few weeks. I mean, it looks absolutely amazing. I think it's in Las Vegas at the moment, but that might be where we go in the future from both a player and a spectator perspective, taking things indoors, doing it more virtually, doing it more simulation. I think there's lots of opportunity for unusual sports futures.
I mean, look, we could all just see sense and stop playing, stop watching, and stop thinking about golf, but that's just me. The spectators in all of this obviously have to move around. The price of tickets for some events, I mean, it's just massive. And that's surely going to be a big issue as well. I mean, in other words, we're going to see a change in the times at which people travel for sport.
And it might, again, to bring it back to the fact that sport might not be, in the future, it might not be what we remember as kids. It might be, Stephen, that it isn't anymore the Saturday afternoon rugby experience or the full day cricket experience on a Sunday. It might be that we shift to evening and late night games. Many games in Europe start quite late at night. Some of that's got to do with culture and timing, but it might be that we just have to get out of the sun, if you like, and deal with things that way. So this spectator's experience is definitely going to change as well. And again, I could see us moving to more virtual environments, more simulated environments, and maybe adding a holographic element or two to some of the way in which we engage with our sport. And that then really opens up why I thought this might be something for us to think about from a business perspective, because obviously sport is a huge money-making thing, whether it's the amateurs and all the kit we all need to buy just to play it in our spare time, or whether it's the professional side of things. Business owners are going to both have what they do and the sports properties they've got come under threat from this, but of course, it's also going to open tremendous opportunities if there are new styles, new approaches, and new formats of sport.
The other thing, of course, the big variable, actually, what really determines whether a sport makes money or not is a television schedule. And in the end, it doesn't matter where you are, you need to have the highest number of people being available to watch it, which has always been the big advantage of being in the time zone that we're in, because you're in the same time zone as the Middle East and Europe, and for sort of certain other parts of the world, whereas, that is North America's big disadvantage, for example. And that surely has to be a big factor for business owners, because they have to manage all of this while making sure that that their event can be on at a time when the majority of the market can watch it.
Well, Stephen, I think you've spotted something very interesting for South Africa. As you say, we've got a very attractive time zone for the global sporting world. We've probably, although we obviously are affected by climate change, we know that we have droughts and floods as much as anybody in the world does. But in general, I think we all accept we've got maybe a more favorable climate than many other parts of the world. And of course, we just happen to be a sports-mad country. And it might just be that if global ways in which people both produce and consume sport, let's just talk about it as a business property for a moment, it might just be that it is very clever to position major global sporting events in South Africa. We know that a number of years ago when India went through their elections and they couldn't do the IPL at the same time as a 1 billion person election. For them, it was a very easy choice. Move the IPL, one of the great global sporting competitions, to South Africa. It might be that South Africa is an unexpected beneficiary of significant changes to the future of sport.
Let's hope so. The competition went very well. Their elections went relatively well. Our elections that year went relatively peaceful. And our cricket was never the same again because of the corruption scandal that followed about sweets at the Wanderers. It just went on and on and on. What we are seeing, Graham, is when this kind of change starts to happen, there's a risk that sports can lose some fans, because sport is a soap opera. You want it on at the same time every day or every week. That's something sports need to keep in mind very carefully.
And that is, of course, where sport is focused at the moment. It is big business, whether it's everything from the T-shirt and kit sales and the ways in which fans support their clubs on social media, or the ticket sales at the grounds. And we've seen the fight over the Springbok brand, and fight, I suppose, in a good way, with many people, including lots of Americans around the world, wanting to buy in and be associated with the brand. So these days, managing a sports brand and making sure that you bring new fans on board, you keep the old fans happy, but you still build innovation and future focus into your sport. there's a reason that sports science and sports administration is now a university-based degree. It really does take somebody with a real focus on understanding what sport is, understanding the business of it, and understanding the future as well. There's lessons there for all of us, but I think sport is a very fast-paced industry at the moment, and definitely has interesting futures ahead.
Graham Condrington, thank you. Really do appreciate it. Futurist and partner at Tomorrow Today. Interesting just to consider how the world of sport, the business of sport, is changing so quickly.
The Money Show.
Consumer Ninja.
Well, Wendy Nola joining us now, and of course she is your consumer ninja. She's been looking at what happens when your car is insured not by you, but by the bank that you're paying it off to. Wendy, good evening to you. I find this fascinating. If you're not careful, you might end up having dual cover on the same car.
Exactly. Hello, Stephen. Yes, I get quite a few of these cases. So what the story is that the bank, it's their asset essentially if your car is financed by them, and so they insist that you have comprehensive cover on your vehicle, right? So that you're not left bereft and you can't, keep up the repayments on your car, more or less. So they will insist that you give them proof of the fact that the car is comprehensively insured. And if you fail to do it, they, in terms of their terms and conditions, will impose a policy on you. A policy that will cover the outstanding payments if the car should be written off or whatever, but they will impose it, and they will impose the premium for that policy on you in the form of a debit order, either a separate one or in one, usually bundled together with your car repayment, right? And so when I hear from people usually when they have provided the proof and the bank has gone ahead and initiated this, what is essentially to them a second unnecessary policy that they're now being charged for, and the bank is not cancelling and refunding them. So, who wants to pay two premiums on the same car? It's ridiculous. So I have a case study, as I always do. I try to. Nelson Choke of Vlakfontein. His car was insured by ABSA, which the insurance arm of ABSA, which was financing his car and is still financing his car. And he got one of those calls, as we get, doing a comparison quote, and he decided to switch to the other insurer. So he informed, this was early November last year, by the way. So he informed the bank's insurance arm and provided them with proof of this new cover. And he thought that was that. But on the 3rd of December, about a month later, the premium of 1,379 Rand came off his account. So he contacted them, complained, submitted the proof again, and was told, sorry, you'll get a refund in 48 hours. That was beginning of December, remember? So when he contacted me on the 15th of January, he'd yet to get that refund. So as I do, I took up his case, and I found out later that the very next day, on the 15th, he got that refund of 1,379 Rand. Sure. And so I did get a response from ABSA Insurance, from the Executive of Business Operations, Leroy Monetsi. He says, we can confirm that our client's policy was cancelled according to his instructions. However, we experienced system challenges which caused a delay in processing the refund that was due to him. We've engaged him directly to resolve the issue and apologize for the inconvenience caused. Don't you love that catch-all? The inconvenienced call. Anyway, so I checked in with Nelson. That was the case. And he said, yes, he did get the refund. But he's not entirely happy. In his words, I'm not interested in their apology. They were not going to refund me if I didn't seek your help. But thanks a lot.
There's a brutal kind of honesty there. He sounds like a veteran of dealing. He sounds like a veteran of dealing with banks, frankly, in some ways.
Yeah, I can't argue with that. Yeah.
How often does this happen? I mean, so I understand. Okay, so I understand several things here. You get a new car, you get a car secondhand, whatever. You want to insure it. You want the best deal. And we had a conversation about this on the radio last night. It's intensely competitive car insurance at the moment. I mean, you shop around for deals and you'll find that you probably will get a better deal. I understand the bank's point of view too. They're financing the car. They absolutely want to make sure that it is properly insured, and they'll be very concerned about this. So I imagine this must happen from time to time. It's one of those things that happens quite regularly.
Well, yeah, from my point of view, it's certainly not uncommon. There's nothing wrong, and I completely understand, and they absolutely should ensure that the cars that they're covering, that they're financing, are insured. And it's better for all of us actually on the road if that's the case. But the issue is when the client is able to prove and does submit proof from an insurance company that they have comprehensive cover, and something goes wrong in the system and it does get captured, and then they carry on debiting. And in some cases, Stephen, it's one debit order, right? So they often will miss it. I had the worst case I ever had was, this went on for 4 years. It was a Standard Bank client. It was almost 2 years ago, March 2023. And long story short, he ended up paying for a second utterly superfluous policy that was imposed on him by the bank for 4 years. He'd been paying without his knowledge. He got a 66,000 Rand refund after I took up the case, which was lovely for him. But of course, the question is, how did he miss that extra deduction? And the answer is that it wasn't a separate debit order, as I've just said. So it was bundled in with his car. And yes, it was more than his car installment that he'd agreed to. But get this, he'd agreed to a balloon payment and then thought, no, I don't want to have this huge amount due in 5 or 6 years. So he asked the bank to increase his debit order. And so he thought that inflated account was going towards paying off his interest and getting to the end of the road in terms of his financial obligations quicker. But really it was going to this, the bulk of it was going to pay for the second insurance policy. And I took it up with the Payment Association of South Africa, and they confirmed there's no prohibition against the bundling of those two debit orders. So I talk about this a lot, as you'll know. It's like you must interrogate those debit orders, to know what's happening and know exactly where your money's going.
Yes. Okay. So, so for most of us, what do we need to do? What do we take away from this?
Okay, so the first thing is always interrogate the debit order. Make sure the amount paying is that you know where that money is going. This came up again with the garage cards. Remember, it was one fee, service fee, and people thought it was just for the one card. Meanwhile, it covered other cards. So always ask the questions. And then the last thing I want to say is that if your bank asks you to prove that you have your own cover, give it to them. So that's I literally less than a week ago, I got an email from somebody on this exact issue. She'd found out that there was a second policy that the bank had imposed, and it was to cover any balance owing if the car should be written off or whatever. So the bank actually phoned her and asked her to submit proof. And she kept saying to these agents, I don't see why I should. Why must I? It's none of your business, which it actually is, as we discussed. And she refused to do it. And she just left it at that. And then months down the line now, she's found out that she's got this extra policy which she's paying for. And obviously the call center agents are at fault, and I am going to take up the case to say when she asked why, you should have told her why and told her what would happen if she didn't submit. You not just leave her to find out in the terms and conditions, right? So, she was wrong, but I think there was wrong on both sides there. So, yes, if you ask for proof, don't get uppity about it. They can, and they are within their rights to know that the asset, which is mostly theirs at that point, is covered. And it's really important that everyone knows the implications of not proving to the bank that you have the cover, and also to follow up and make sure that they've got it and they've processed it, and that you aren't inadvertently paying two insurance policies on the same car. Yeah. And
it's just another reminder to pay a lot of attention to the money going out of your bank account. Look at each debit order from time to time and just make sure you have an understanding of where the money's going.
Yeah, make no assumptions.
Wendy Nola, thank you very much indeed. Your consumer ninja this evening. amazing how often people can get caught by that as it happens, just not realizing what's going through their bank account. But you don't want to get stuck paying 2 insurance premiums at all. Something you really do want to avoid.
WhatsApp Stephen
On 072
702
1702.
Well, in a moment, looking forward to speaking to Donald Valoyi, the CEO at Zulzi, one of those companies that really does seem to be making quite a big difference, not just in terms of the number of motorbikes that you see, but also behind the scenes as well. We'll be watching that. And of course, just watching the situation in the United States very closely, looking for any more executive orders or headline grabbing statements, I suppose deliberately so, by the new President Donald Trump. Just really waiting to see what he says about tariffs. And of course, I think for many people, the problem isn't what he says. It's about what he actually puts in writing in the form of orders, keeping an eye on that for you tonight as well. Just gone 7:30.
The Money Show.
Shapeshifters.
23 minutes to 8. If you had to go back and think what kind of industry, what kind of business has really changed your world over the last 5 to 10 years, apart from artificial intelligence, one of the first you would probably think of is deliveries, the at-home delivery services. Even if you don't use them, just moving around, you will see motorbike after motorbike after motorbike literally everywhere. And that really is a big part of it. And I'm pleased to tell you that in our studio is one of the people who's really kind of shifted or shaped that industry. Donald Valoyi is the CEO of Zulzi, one of the first sort of trailblazers in this industry, and has also played another role in one of the other trailblazers in this industry. Donald, good evening. Thanks so much for coming in. I really appreciate it.
Yeah, good evening, Stephen, and good evening to the listeners as well. Very excited to be here.
I see you live the brand. You've got a Zulzi t-shirt.
Yeah, that's how I live, right? I sleep, drink, eat Zulzi, right? That's my life.
Okay. So the history of Zulzi is you started by delivering books and electronics to students, right?
Yeah.
This was what, 2014? Quite a while ago.
This was 2013 actually, right? So we started as an e-commerce platform where students were able to order books, electronics online, get them delivered same day. And then we sort of like improved the service to sort of like started delivering like, books, electronics within 1 hour, right? At that time, I was the one doing everything. Like, so you order online. I'm the guy who's driving the van. The books are in the van. If you complain about the service, I'm the one who's probably going to answer the phone. I used to do everything, so that's where I actually got to learn a lot about e-commerce at that time.
How were you able to cut that was revolutionary to have it on the same day at the time. This hadn't really been done before. Did you keep all the stock in one van?
Yeah. I had to. I kept it on the van, everything, split point as well. You order online, you can pay online at the time, or you could actually order cash on delivery. It was quite fascinating. I think you get to learn a lot actually by interacting with customers. There's nothing that replaces that, right? This is one thing that I still do even today, from time to time to go to understand exactly what the customers are looking for, right? So interacting with customers is quite critical. And I think for me personally, that's one thing that really shaped us at that time when we're actually delivering these books to students, same day, interacting with them every day.
So one of the big things about students is that they're student hubs, right?
Yeah.
So there's sort of Wits University of Johannesburg. There's there's another institution around there.
Yeah.
You've got Tswana. You've got the University of Pretoria. You've got the Tswana University of Technology. That must have made it a lot easier.
Yeah. Look, I think also we're very focused on specific universities in the beginning, like your UJ, Wits University. In fact, back then, what I remember very well is when we started this e-commerce, launched the website, and no one was buying online. Right?
Sure.
The goal there was to sort of really make R1 million within the first 2 weeks. And then I had this stock from different publishers that were in my, 2-bedroom apartment in Fourways that was being used as a warehouse. And then, within the first 2 weeks, no one was buying online, right? We had these Facebook ads, advertising the platform, but no one was buying, It got to a point where it was very clear that if we don't do anything, we're going to have to shut down and go back. I have to go back to my boss and apologize at FNB. But then I decided that the best thing for us is to really go to the campus, set up a stand, and really started selling the books physically, right? And that way, then I was able to introduce students to e-commerce, right? And then, the following years, a lot of students now were more familiar with e-commerce, how it works. they became more and more comfortable about it, and they started ordering more and more online.
So, okay, I can understand you can have one van, one little house in 4 ways, and you can still manage some of the institutions in Gauteng in one day. To do it in an hour, how were you scaling up by then?
Yeah, so first year it was not within an hour.
Sure.
So first year it was like, same day, sometimes next day delivery. But then the following year, then we started to add more capacity, right? More vans. So in that year, then we were able to sort of like reduce the time from like, next day delivery. Because at the time, in fact, we're competing with the likes of your Take-A-Lot and Kalahari at the time. So those big e-commerce players, they used to take like 3 days or 4 days, right? And students didn't want to wait for that long. In fact, when we reduced that time to 1 hour, that's when we realized that actually a lot of people now are interested in our services. And I think that's where I started to ask myself one question: what if we could do this for everything, right? Not just books, because books were very limited in terms of scope, the market as well. So I really wanted to sort of like now start working on something big where you can actually cover a bigger market, So that's where it's all started.
How many people were you employing? I mean, still vans then, not motorbikes yet?
Yeah, I think then it was like, let me put it this way, because we're not funded, right? So it was more about like your family members.
Yeah.
Anyone who doesn't have a job, who's unemployed, can come and work for me, but there was no salary, right? You probably get paid with a nice meal at the end of the day, So it was, it was really like, let me say it was really tough at that time, right? Yeah.
I mean, there must have been moments when you thought, well, actually, this isn't going to work. And yet you were on the crest of something. I mean, technologies were changing and converging to produce a service like yours.
Yeah, look, I think when it comes to technology as well, you always have to look ahead, right? A lot of people just see what's here in front of them, right? A lot of people I'll say they lack an imagination to imagine tomorrow how it's going to look like, right?
Yeah.
So if there's one thing that really like motivated me, I was so sure that e-commerce is coming, right?
Yeah.
You can't run away from that. Even today, when you look at the total sales, whether if it's retail, offline, online, it's very clear that online is going to continue to grow. Those trends are everywhere, right? So for me, that's what kept me going, right? That, I have to stick to this space and make sure I continue to innovate in this space.
What were you doing? You said you worked for a bank. What were you doing that gave you that insight? So, I mean, that's an insight many people would have had. I mean, I was, we're probably sort of roughly the same age. And I mean, people would have known, but very few people acted on it. I mean, you and George Bezos did.
Yeah, look, I think action is everything, right? So, look, I mean, I was in the IT space, right? So, but I mean, like, there was really like no e-commerce that we're doing at the time, right? It was just like, fixing the systems of the bank. But I think, outside of work, I was always fascinated about business, right? So, there was a lot of reading that I would do, following a lot of startups as well in the US to see what they're doing. So that gives me a lot of insights in terms of like what is coming, right? Because I think also one of the mistakes you can make is to think like Africa needs something completely different to what's happening in the rest of the world, right? But I can tell you now that a lot of things that are happening in the US, they're going to happen here, right? And the question is always about like, what are we talking about now, right? If the whole world is talking about AI and we're talking about something that has got nothing to do with AI, then we are lost, right?
Yeah.
So at any given time, I think you have to put aside your emotions and how you feel about, what you see now and really look at the bigger picture of what's happening with the rest of the world, right? So, yeah, that's what we did.
Such an important point. I mean, when, people will talk about African solutions and like, well, we're no different to everybody else.
Yeah.
We're the same.
Exactly. And I think a lot of people will end up making a lot of mistakes, right? And what you then see is like a lot of these companies on the US, they come here and then they just eat our market.
Yeah.
While we're still developing African solutions, right? You've got the likes of Uber, you've got the likes of Airbnb, Booking.coms, and I'm saying that should not be happening on our watch, right? We need to start creating African platforms, right? And that's what you're seeing as well. If you look at India, you look at China, it's very hard for these other companies to go and penetrate those markets because the guys are very much alert as to like what's happening in this other place, right? So again, I think for African people, we have to wake up and say, like how do we start developing solutions by also looking at like all these developed markets to say what can we do, right? Because I mean, if you look at Africa, we've got a like massive opportunity in terms of middle class, right? That's coming up, young people coming up, and those guys, they need like new solutions, right? So we have to develop it.
Okay, so you're delivering to students. You've got a market that you've built.
Yeah.
You've got a couple of vans going.
Yeah.
Presume you'd moved out of 2-bedroom and 4 ways by then.
Look, I think I had not moved out. Everything was still happening within. Let me say, like the books business. Really, like it was just a stepping stone, right?
Yeah.
So there was no time for. In fact, I could not even get an office at the time, right? So everything was happening in that apartment. And then fast forward, I also tried to get into clothing. I think the clothing business was very tough for us. In fact, there was a store that used to do very well by selling like these African traditional attires. I thought I could put them online. And then when customers started ordering, they couldn't deliver those products to me. And then I was like, okay, let me solve this problem by buying a sewing machine. And then I hired people to start sewing the dresses, but we got the sizes wrong. And there was a lot of returns. There I bent my fingers. I did it for a month. But I was always looking for these things, right? To say, like, we're going to find our break, right? So
you start to expand. You start to sell other things. And particularly you move into the sort of food and booze business, liquor.
Yeah.
That must have been a massive expansion for you. Not just in terms of what you're selling, but geographically too.
Yeah, so actually how we started then we transitioned. Then I had this idea that, okay, now that I can see that when we deliver things within 1 hour, people are interested.
Yeah.
Then I asked myself that one question: what if we could do this for everything, right? We can do this for groceries, fast food, alcohol, pharmaceuticals. And then that's when I was like, okay, cool, let's build an app, right? And then Michael joined me as well, Niche Piece, who used to work together at FNB, joined Zulzi, my cousin as well, anyone like who was available, a friend, they came in. In fact, at the time, I remember I also got like some cash from SAB Kickstart. I think it was about 700,000 Rand. And then with that 700,000 Rand, in fact, what I remember very well, I was like, I went to Mike. I was like, okay, cool, Mike, come, let's build this together. I'm going to pay you 100,000 Rand a month. And was very excited. He joined immediately. That was his first and last 100,000 Rand, right, at the time. All in all, it was, and then we started building this platform that sort of like was looking to aggregate these different retailers. So you could order from Woolworth, Pick and Pay, but we didn't keep any inventory, right?
Yeah.
So with that, then we're able to scale. But things, because obviously as we're scaling as well, we had a lot of challenges in terms of money, no partnerships as well. So on the food side as well, in fact, one of the biggest categories was food. Because at the time, in fact, Uber Eats and Mr. D were not there, right? Mr. D, in fact, was more like you still call to order. Yeah. So we were like, it's an app, right, where you can do all those things. But 6 months after we launched, in fact, 3 months after we launched, Uber Eats came into the country, Mr. D as well. They started to take their business very serious. And it was very clear that in that space, competition is going to be hot, and we are there, no partnership, no funding. We're just doing it from our own pocket, right? I still remember when we started to do like about R1 million GMV a month. It was very exciting, but at the same time, it was very clear to me that to compete in the food space is going to be challenging because I think food was like 90% of our sales, right? 10% was groceries. But then I made a choice that, let's rather focus on groceries. Let's remove fast food because there I didn't think we're going to win. I remember when Uber Eats launched, for instance, they were offering people free burgers, right? Yeah. I tried to eat as much as I could. I thought I could take them down by eating their burgers. But it was very clear that, no, there's no way, right? So that's when I decided that I think the best thing for us is definitely to focus on groceries, which I think also, again, it was driven by inside of what was happening in the US. What was clear there in the US is players like Amazon were really looking into that space, right? So Amazon at the time was looking to acquire another grocery retailer called Whole Foods. So it was very clear that the grocery space was going to be something exciting in this country. And then we decided to sort of pivot and focus a lot on groceries. What was exciting there at the time, in fact, when I deep down into how many customers we had in groceries, in fact, we had one customer who used to order from us. So that 100,000 Rand, most of it was actually coming from one customer. So you could think of it as someone who actually left maybe about 500 customers that we had to focus on one customer, which was groceries, right? At that time, I think the people who were doing groceries or the companies who were doing groceries was just Woolworth online, Pick and Pay online. And then, we're these guys who were actually looking to change things, right? So we're very bold. We're promising 1 hour delivery from Woolworth, Pick and Pay, these scam clicks. And I think that's where a lot of people started to really enjoy our service, even though there was no partnerships. So at the time, for instance, you will order, and then we'll transfer money to someone's card, the shopper, and then they'll go to the store, buy the stuff, and then we give it to a driver, then they come and deliver to you, right?
Sure.
In those days, sometimes you find that like as the guys are shopping, we're running out of cash, right? Because like as you're buying stuff online, that money we're going to get it the following day. So as we're scaling, sometimes you find that I need to actually call my friends to ask for money, right? And then at times I will have to run to the ATM to deposit that cash because we couldn't afford to sort of like wait any longer, right? So yeah, so it was my daily thing that I used to do almost every day, right?
We're speaking to Donald Valoyi, the stories around the formation of Zulzi. Some more questions to ask him about the industry as well.
The Money Show.
Shapeshifters.
Donald Valoyi is your shapeshifter, the CEO of the delivery app Zulzi. So, Donald, I was doing some research today, and everyone talks about the 60/60 platform. You knew this was going to come out, right? This is the Checkers platform.
Yeah.
And everyone sort of sees it as the market leader. You know, how are they doing? Can anyone catch them?
Yeah.
It's true that you built it, right?
Yeah. Look, I think, it's been an amazing partnership with Shoprite Checkers, which I think, happened before COVID. A lot of people think it just happened in COVID.
Yes.
But I think we started chatting to them a year before COVID, and then we started building the platform. I think they came at the right time, to be honest. At that time, I didn't know where we were going to be, right? We're really we're drowning, we're building this fascinating app, but there was just no money, right?
Yeah.
In fact, the landlord back then in an office in Bram, every time they'll see me coming for an interview, they will be there in the boardroom, asking me when am I paying rent.
Sure.
So I think that was it was a huge blessing for us because then the opportunity to build the 60/60 platform enabled us to sort of continue to innovate. Zulzi today, for instance, Zulzi now we've got the pharmacy category that is doing very well. We've got our own dark stores. So I think that has been an amazing partnership, and we continue to still work with them very closely.
I find the business fascinating. I mean, I was in Plettenberg Bay over the Christmas period for various reasons, and there was a huge fleet of delivery bikes there, and I had visions of them. Do they all go down on the N2 together or something?
Yeah, and if you think about it, it's still early days, right? Because a lot of people think this is the end of it, right?
Yeah.
It's still early. E-commerce is gonna shift a lot, right? If you think about what's coming now, AI, I think e-commerce is going to change completely, right? So if you think about also the penetration of internet as well, a lot of also fascinating players as well doing amazing things, even in the townships, players like Mavoni, for instance, installing high fiber internet in areas like Cosmo City. So what's happening there, we are seeing a lot of even connectivity happening in those areas. So players like us, that means we can expand to more areas as well, right? So I'm expecting a lot of growth coming in the coming years.
There's going to be a lot more competition too. At some point. So it is clear that the 60/60 has a sort of an edge that you sort of gave them.
Yeah.
And this is sort of based on the work you were doing out of your 2-bedroom flat in Forward. And yet, the competition, other people are going to buy technology, create new technology. Your space is going to get more and more interesting.
Yeah, it is. I think, let me say it's really interesting, right? If you look at various categories, right? Whether if it's travel, our space e-commerce, it's only getting started.
Yeah.
Right? And I think that's the most important part, that we must actually highlight the fact that it's just getting started. We're not yet at the end, So some of the mistakes that a lot of other retailers made, for instance, if you think about it, the first players to really have an e-commerce platform, it was in Checkers. It was the likes of Pick n Pay, the likes of Woolworth, and they thought, we've got this, right? Bottom line is we're still in the beginning, and there's still going to be a lot of shifts that are going to take place. The biggest part is, can you keep on innovating?
Yeah.
Right? Because also what's going to happen as well is, with technology, what it means because technology has no boundaries. Right? You're going to have players from outside. You're going to have Like, I mean, the clothing guys will tell you this, right? When they were still chilling, having fun here, the Chinese just came from nowhere, right? So I will say with e-commerce, you can't sleep and say you've already won and celebrate. You have to keep on working, keep on innovating. And whenever there's new stuff, new technologies, you have to be in the forefront of that, right? Because remember, like also the other thing that will change as well, things like how we buy things is going to change, right? You might find that, the next year, for instance, it's not just about you being able to order on your phone. Maybe it's now voice that is taking over, right? So the way people want to buy things, you have to monitor that very closely, right? We're already seeing it in, various things like travel, for instance, as well, right? Like where, people now want to see how the place looks like, right? Yeah. So they will tell you a lot of discovery, for instance, happens outside of those platforms, right? So again, like I think, you can't sleep and say, like I'm done, right? So there's no winner. Like if we thought there was a winner, there's no winner yet.
Donald, I don't know if you ever sleep. Do you see yourself, I mean, people have already tapped you for your brains and experience. Yeah. I mean, do you see yourself sort of staying apart as Zulzi?
Yeah, look, I think, I still want to build. I still have the energy to build and really take this business to the next level. Very, very fascinated about like also working with young people, right? Yeah. By the way, one of the things that we had on Zulzi is like we've got a lot of young people who come and work for us. All these brilliant young engineers, right? Average age you're looking at 24 years old, right?
So irritating.
Yeah. So like I think for me, like really working with these young people is fascinating. So I think we'll continue doing this. It's just like something special, man. Yeah. Someone who has never really done these things and say, here's a problem. Can you solve it? And then you solve it in a new way. So I think I want to keep on innovating. I want to keep on, working hard and pushing this thing to the end.
Donald, thank you so much for coming in. I really do appreciate it. Donald Valoyi is the CEO at Zulzi. Fascinating to see how the business has grown and really what it's done for the entire at-home delivery business, I would suggest, in South Africa.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Well, that's it for The Money Show tonight. We'll be with you again tomorrow. Good evening, 8 o'clock.
This is EWN.
Good evening, I'm Maki Malapo. The Johannesburg High Court has justified a 3-life sentence handed down to convicted killer Eugene Botha, saying he deserved no mercy. Botha was sentenced today for the murder of his mother, Marie, his father, Johannes, and his younger sister, Sonia.